In my mind, I'm gone to Carolina.
Greetings and welcome back to Fisher Wealth Management Tips of the Week. Once again, I'm Rick Fisher. I'm the managing partner here at Fisher Wealth Management. In previous posts, we've touched on the fact that the S&P 500 has really been the hot dot for equity markets in this bull market we've had for the last 6 years and change. It's really been lagged by virtually every other class of asset. But the asset class that's really lagged it the most may very well be emerging market stocks. I've really gotten many calls this year saying, Rick, should we move out of all those other types of stocks and put everything in a low-cost S&P 500 index fund? I try to remind our clients, and I'll remind you, proper diversification has been a pillar of successful investing for a long time. And it's been that way for a reason. Markets move at different times. Buying last year's asset class winner has most likely been a painful experience for most people who have done that over and over. As we look forward and not backward, we will really try to recognize where the areas of opportunity are in financial markets. And we like some of the characteristics that we're seeing today of emerging market stocks, especially as we compare them to some of their alternatives. First of all, emerging market countries, their economies are just growing faster than their developed country counterparts. Asian economies, excluding Japan, will grow above 6% this year, and the U.S. is hovering around 3%, and Europe and Japan are less than half of that. So these emerging market countries are just growing more quickly. Number two, many of these countries have trade surpluses and owe less money than we do, and do any of their developed country counterparts. And third, and certainly not least, is while emerging market stocks are up 10% this year, by the way, and the S&P 500 is only up about 3%, these stocks are still trading at about a 25% discount to their developed market, especially U.S. stock counterpart, when we're looking at a price to earnings ratio on a forward-looking basis. So, investing internationally has its own set of risks, of course, and tends to be more volatile in both directions, but we do believe that an emerging market stocks are an asset class to consider as a part of most of your well-diversified portfolios. So as we always say is if you're not having these types of conversations with your advisor of choice, we do welcome you to call down here at Fisher Wealth Management, speak to me or one of our other financial planners on staff to see if a position in this class of asset may be reasonable for you, or moreover, for a full-service complimentary confidential review. So thanks again for listening, and stay tuned for more Fisher Wealth Management Tips of the Week.